Hey, good evening, everybody. How are we doing? Hello, Gilbert, Gary, Dicron, B12, Sam, Carla, Dave, Paulo. Hey, Carol, how are you? Deborah from Florida, how you doing? GB, howdy. Ron, Bo. Glad everyone's here. Thank you so very much. I appreciate joining us for our public e-learning on this Tuesday, September 12th, 2023. Glad everybody is here. We're going to talk a little blue ice failure or major moving failure, really. But mostly will be about the 50-period moving average. Today, it was kind of, I think most of you, well, I hope you received an email talking about tonight and tonight's topic. And, you know, one of the little highlighted areas on the email was be prepared. And the whole idea behind that was the way the market was looking here. You know, we were kind of sneaking up a little bit and maybe we pop up, and the whole idea was to get prepared for when we come back down, whether we, you know, played around and went up higher or not. There's no doubt in my mind that we're going to come back down. And there's no doubt in my mind that at some point we are going to violate the 50-period moving average. What I didn't expect until late today was, well, it's going to be today. So while I thought I was getting smart ahead of the game before we kind of shot the 50-period moving average here today, I thought I was getting ahead of it and you know, being prepared, but didn't work out that way. So that being prepared is on us right now, so we have to be prepared. Okay, so let's do this here. There is a lot of stuff going on here in the next couple days. You got the CPI numbers tomorrow morning, EIA numbers tomorrow, jobless claims, PPI, retail sales, business inventories, EIA, natural gas. You've got balance sheet, manufacturing index, import and export, industrial production, consumer sentiment here. You've got a lot of stuff going on, a whole lot of stuff, treasury statement going on tomorrow, Thursday and Friday. So there's a lot of things with this market that could go wrong. Now, the thing of it is, I'm going to put up this chart. No, let me find the right chart. I was playing with these charts. There we go. We're going to put up this chart. And we're going to put up the weekly chart here. Now, there's been a whole lot of things that could have gone wrong, but yet we've been bullish, right? The red dots and green dots, that's what we call the trend indicator. Honestly, it's nothing more than the 17-period moving average or a moving average of your choice. I choose to use the 17, okay? So just simply the 17. The white line is simply the T line, or for those that don't know what that is, it's the 8 exponential moving average, and that's that white line right there. And I choose, in trading, you guys all know that, right? Everyone knows that. You have a choice in trading. There's no perfect way to trade. There's no perfect moving averages or indicators or anything for that matter. There's no perfect chart pattern or candle pattern, nothing at all. What's perfect is what works for you and what you can make sense of. And I can make sense of this. I've learned how to make sense of it. It certainly didn't, you know, one day I didn't put the T line up here and the trend indicator up here and shebang, all of a sudden, whoa, this all makes sense. It takes time. It takes time, and I think most traders here know that. It takes a little time. So I've just become comfortable with that. If you choose or chose to use, the 20 simple, we talked about this in the trading room today. If you choose to use 20 simple, these would be my choices if I didn't use the 17, and that's a 20 simple or 21 exponential. Okay, I just choose to use the 17. Now, with that said, a whole lot of my scans actually use these. Well, I said a whole lot. That was an unfair statement. I have scans that use those because I have scans that do the exact same thing, just tweak the moving average a little bit. That helps with maybe early, visual of the chart, the price action, maybe a buy or maybe a sell. And this is a habit of mine, and I am so sorry. I am digressing from what we're supposed to be talking about. So I truly do apologize. That's a horrible habit of mine. Let's just start this over. So what I was pointing out here is this is the weekly chart, and we've had tons of problems way back here. Nothing has changed. The problems are still there. They could be building more. I personally don't know. I can't forecast that, or I don't have a crystal ball that say the problems are building and building and building, and I don't know. But I do know that the exact same problems that might be happening right now in the market, they were all back here, and they were all right here. So sometimes it's just a day that ends in Y. All of a sudden, for whatever reason, the market starts to get a little wacko. So what the point is you have a choice. Okay, that's where I started with this. Is you have a choice. You have a choice to wait till everything is clear green to be bullish, or everything is clear red to be bullish. And here's some examples. Okay. And we'll get to the 50-period moving average. You could replace this with the 50-period moving average if you want. And when you get the green, let's see here, the green goes to red, well, that's a sign there's a problem. Now, it went red right there. But what I'm looking for is confirmation. So maybe... maybe that red dot, and I could see you squeaking on the very next one over there. So for the green side, the bullish side, then there's no doubt there was some sort of a bullish candle here. There has to be, or a candle pattern, something here. There absolutely has to be to make this rise up like this. Some sort of pattern, multiple candles, one candle, it doesn't matter. Price action drove us up. Had to start down here. Well, you have a choice. Got myself in a pickle here with colors. You have a choice to be a buyer here. You have a choice to be a buyer here. Or and that was a little... You have a choice to be a buyer here, maybe. And you have a choice to let the trend start and be a buyer here in this area. Now, this is a pretty broad picture because there's no price action on it. We use price action to make those entries. So we're going to go and look at that price action, but I just want to get the basic idea of a moving average and how we might look at it, okay? Now, one thing I've learned, and this takes a little bit of time, this is not something you just wake up or you look at this chart and you go, holy moly, the dots all connected. Nah, they don't connect all at the same time. Takes a minute for that to happen. But you see this start to move sideways. Now we can go look at the price action, and it really paints a good picture of caution in here. And we all know that. I'll bet every one of us in here has looked at the daily chart of the SPY probably multiple times today, so you know exactly what it looks like through here. And this chart paints that broad picture. Well, as a trader, we want to learn to recognize that that's moving sideways and going nowhere. Now, we have a choice. We have a choice to jump into this and be long if you think everything is long, and you have a choice to jump in bearishly if you think everything is bearish, or you can wait till the chart proves itself like this area here for a short, or it goes way back here. If I change everything, we're going to lose all this. Well, we're going to lose it anyway. There we go. See how we went from red to green? You have a choice to be that buyer down here, and there had to be some sort of candle pattern or some sort of chart pattern that started that drive up. You have that choice, or you can wait for the confirmation in here. Now, what I'm going to mostly suggest tonight is waiting for the confirmation. Unfortunately, the market has got us into this, I have to get out right away to make any money. Maybe we should make that green, huh? I have to, if I buy, I have to get out right away to make some money. And when I say right away, one thing I've noticed is, and not everybody, okay, not at all everybody, but I've noticed a little trend. If you get in, it moves a little bit, and what happens is you'll move your stop up really, really tight, just asking to get punched in the nose. You get stopped out, and you don't get to take what little profits are there, but we're so afraid to let it go. And that is, the market has trained us to be that way. Well, we could fight back with recognizing when the market is working and when it's not working. When it's working, and it actually worked here just fine. Okay, so I'm not changing working or not working. That was a very clear, except for the turn. We'll call that. Right there at the turn, that may cause difficulty for a lot of traders. And this right here, this is just absolute difficulty for traders because there's no direction. And sideways is not a trading direction. Traders want to be bullish, or traders want to be bearish. Sideways doesn't cut it. Okay, so you have a choice. So let's go look at some charts. Let's go look at the SPY here. You have a choice knowing that there's a wheelbarrow full of possible bad news coming up, or possible, what is it lately? Bad news is good news for the market, or something like that. So really, it's got nothing to do with the news. It's how the market interprets it. It's what the market, so if there's really, really bad news for the market might say, well, that's not as bad as it could have been, right? So the market starts running to the upside. Very possible. Whatever news tomorrow could get us going up. Whatever news tomorrow could get us going down. You have a choice to be here. And the point I'm trying to make here, if you make money and then you give it all away because of an uninformed choice, because you are uninformed here, there is no information that gives us any great insight to trading. Okay? So let's talk about blue eyes failure. So what are we after on a blue eyes failure? And the blue eyes failure, the name, a gentleman by the name of Dave Elliott, I want to always give him credit. You can't improve on this. I mean, he did it years ago. Some of you may know him by First Wave. It's not the first time we've mentioned that. I'm going to use his term, blue eyes failure, and I absolutely want to give him credit for that. It's just a strategy that it can't be beat. Now, you can tweak things, you can add things, you can make it yours, but the basic overall strategy is absolutely wonderful. And you can use this same strategy with any moving average you want. We choose to use the 50-period moving average because that seems like that is a dividing line between buyers and sellers. Just like the 200-period moving average down here. This can be a dividing line for buyers and sellers. Below the 200-period moving average, there tends to be some selling until the buying steps in. And above the 200-period moving average, there tends to be buying until, I said this one backwards. There tends to be selling until buying comes in, and there tends to be buying until selling comes in. And the 50-period moving average the same way. So example, if the market was to just kick off any bad news, and the market is happy with whatever news, that would be the bullish side of that 50-period moving average or major moving average, while this would be the bearish side. And I would find it surprising if anybody disagreed with that. That's pretty simple. It really, really is. What happens is we try to beat the game, scam the game, run the game, whatever you want to call it, by making uninformed choices. So what I'm suggesting is we make informed choices. Here's some things we know, all right? We know we have a high and a higher low here. We know that. Now, we know that if we fail this area, that there's only really a couple area targets that we're going to look at. An area, I'm just going to split the difference of this low and that low. That area right there. I apologize. A grandkid cold. So that is a target. So if we know this information ahead of time, and you know this information ahead of time, if you do the work on the chart, you would look at that absolutely and say, that's in the area. Yes, it is. The next area below, probably the most common for everybody here is going to be the 200-period moving average. Up from that, this is what we call the dotted deuce. I put a lot of weight in that moving average. And something you can't, well, maybe you can see it here. I keep it very dim. I'll brighten it up for a little bit. And that's this line right here, and this is the 500-period moving average. This is some common stuff. Now, you can put fib lines on here if you want. You can put all kinds of decoration, ornaments, colored bulbs, whatever you want. But in the end result, it will all shake out to be about these areas. Every single time, 100%. So you can keep it simple. And I'm not saying that, say, putting fib lines on here is complicating. I'm not saying that at all. Putting Bollinger Bands on here. Hey, if you want Bollinger Bands, knock yourself dead. If you want MACD, if that works for you, that's okay. But at the end of the day, these areas right here, it's going to get you there, okay? You're going to be in that area. The point I want to make here is we don't have to make an uninformed choice. So here we have a really nice, and I'm probably not going to use the word possible too many times just because possible blue eyes failure. I've been talking all day, so anytime I can eliminate some words, I'm going to eliminate some words at 7:20 at night for me. So just because we might say the word blue eyes failure does not mean it is going to fail. And that is true with any strategy, any moving average, any chart pattern, any candle pattern, any setup. Just because it's there doesn't mean it's going to work out. Okay? Hey, Kevin, sorry, I got to chat in here. I saw your note there. It's the simple. I think that's what you were. Yeah, it's a simple. Thanks, Carmen. Appreciate it. Yeah, it's a simple moving average. So rather than make that uninformed decision when you know there's a downtrend here, when we have moved down and made a bear flag, that is very informed right there. But we don't know what that news is going to be. So this is an area where I personally feel, my own trading, it's time to pump the brakes. And that's what I did today. Took some profits off Tesla, told to close my Tesla, close my Amazon. Everything worked out great. Excuse me. I do apologize for the little cough there. So I'm looking at this and I'm thinking maybe below this area, because that would show a little proof maybe that we're not going to, slide down and then bounce right up, because it's very possible. You guys all know that. And when you look at that, there is ample room to make money down to those areas, assuming we get down there. We could stop at any one of those areas and turn around and try this again. So I've got some charts to look at. I am truly possible. Sorry for this. Apologize. We've got some charts tonight that I think are extremely actionable, and we're going to look at those. We'll certainly look at some of yours. A couple things I want to do here, because Kev asked, sorry, maybe it's not Kevin. I'm going to get rid of all this. The blue is the 50 period moving average. The T line, that's that black line, that's the 8 exponential moving average. The red and green dots, that truly is nothing more than the 17 exponential moving average. We just created a very clever way to turn it into red and green dots using this program, TC2000. The red line down here, this is the 200 period moving average. This line here that I'm going to dim down in just a second, because it's just a background moving average for me. That's the 500 period moving average. Let's go ahead and just dim that down right now. And you might be able to see it now that you know it's there. I just keep it, I can see it. And it just, and there'll be a couple charts I believe we're going to look at that I'll bring it back up again. This red dotted line, this is what we call the dotted deuce. So grab your pencil, take a snapshot of this if you want. It is the 200 period moving average. It is the front weighted opposed to simple or exponential. It's the average of the low opposed to the last price, okay, or closing price. And that's about it. There we go. Hi, Nicole. Do you know if the Trendmaker can be put on other platforms? Whoops. Oh, thanks, Malcolm. Besides TC2000. I think it does. I think you can. I will work over the next couple days, because what I'm going to do is I'm going to ask our members in the room if they have the code, and I'll be more than happy to share it. It's not anything secretive. It is just the 17 EMA. That's all it is. If I wanted to, I could turn this off, do that, and I could put the 17, turn that on, and there it is right there. I change the color on it. There you go, hot pink or whatever it is. That's the 7. It's the same exact line, okay? Like I said, we just figured out a clever way to make the red. Sorry, I can't do this and talk at the same time. There we go. We just figured out a clever way to turn it red and green. And all that represents is when price is below the dots, they turn red. When price is above the dots, they turn green. That's all it is, okay? All right. So bottom line, what we're looking for is we're looking for in our case for tonight, and And the blue ice failure can be in charts where the 50-period moving average is moving down, and then price rallies up, and it can fail near or right on or right above the 50-period moving average, and then continue down, and that would be a type of blue ice failure. And again, you could do this with any moving average that you want. Any moving average. You can call it whatever you want to call it. It's just a failure of a major moving average. For you bullish traders, you could do the same thing to the bullish side. When you get we tend to call that a bounce, maybe. A bounce off of a major moving average. Everything we do here can be put into a different moving average. For the most part, it can be put into, say, the 50-period moving average trending down, for the most part. All the price action, yes. The only difference is, I guess, it's moving up versus moving down, maybe. That's it. So let's take a look at some of those charts. Where's one? Let's take Flex as an example. Now, we have a choice. I want to go back to this thing. We have a choice here. And we have a choice to, let's see here. That's not what I wanted. We have a choice to be short here. You do have a choice. The thing of it is this chart is clearly, if you look at the 50-period moving average, and I trade with moving averages an awful lot, that 50-period moving average is still bullish. So as we put a sell signal up here, there is absolutely zero, a great big goose egg to put your eggs into to think that if you put your eggs into this basket, you're going to come out a winner. These pullbacks, candlesticks, are very, very short-term in nature. They are not at all long-term. So this candle pattern up here could come right down to a major moving average, like the 50-period moving average, and bounce, wobble around maybe, and then start running up. Now, there's an awful lot of traders in here probably and around the world that play trades just like that. They look for the 50-period moving average. They want price to come down to it, and they watch for that buy signal. So if that is the trade for you, there's nothing wrong with that. That's not a blue ice failure. What we're going to do is we're going to allow it to fail. Allow it to fail. Right through here was a failure. We closed below it. I'll make that bigger so you can see it. Sorry about that. We closed below it, and then we rallied up. This right here might be the clue to be short on this, and that would have been profit in that area. Now you may have you get a candle like that, more than likely I'm going to guess you've taken some profits out. Okay, we start moving up. We move up here, and all of a sudden we have this blue ice failure again. Not only do we have this blue ice failure, but we can start putting lines up here. We now tag this high, move it down, and here we are. And we're below the 50-period moving average. Generally speaking, until you get that buy signal below the 50-period moving average, when you come from the top down, that's short, and back above, we would look at that as being bullish, okay? So we're going to look at this as being bullish as long as it follows our rules. Very common rule for me, as long as those red dots are red, that's still bearish. Now, if we come in here and maybe we trickle to the downside, and then all of a sudden we put in a great big hammer like that. There's our dotted deuce. Well, that is no longer bearish at this point. So what's going to happen, rise back up and then get bearish again. Okay, so if we take a look at the way this is setting up, here's a nice little chart that just might want to pull back a little bit more. Now, like I think anyway, the majority of charts will follow what the market is doing. When you think about it, the market, by the way, my definition of the market overall is the SPY. The SPY ETF or the S&P 500. That when I say market, that's what I'm referring to is the SPY. So when the SPY is down, the majority of the stocks are going to be down. That's not because the SPY is down. That's because the majority of stocks are down, and that's what's making the SPY down. It's common thing to say, well, the SPY is down. The SPY is below the 50-period moving average. It's not the SPY below well, it is below the 50-period moving average, but it's all the stocks that make up the majority, not the word all, scratch the word all. The majority of the stocks the bearish majority is outweighing the bullish majority. That's what makes the SPY go down or up if the weight is on the other side. So using the SPY is just giving you an indication where the power is, the majority of the sellers or the majority of the buyers. And if we look at the SPY here, right now, I mean, if you banked everything on today, it's all down below. We can't hardly bank everything on today because there's other things that go in here that we have to think about. One, we still have higher lows, and that's our problem to the upside. So just simple drawing of lines. And once again, you do not have enough information to make an informed trade based on the direction of the market, the SPY. All right, now let's go look at another one of these. Let's look at WMS. Look at that. Look how we put this top in. And I'm not saying this can't be traded from the top. If that's, if you're a top picker, more than likely you're probably a bottom picker as well. There's nothing wrong with trading that. That's just not the strategy that we're looking at today. All right. Now, here's a top. We've made a high, a lower high, and let's move this down. So right here, we've broken out of that high. That is going to erase that line because we've actually come up here and made another little high, kind of tickled that little high up there. So what we're going to do is change that and move it up here. Remember here, we didn't have that information. Here, that's the only information we have. So we're going to make some adjustments. Okay, fine. You can clearly see the sellers are losing this battle from this high and now to this high being failed. Well, here we've gapped down below the 50-period moving average, making this a possible blue ice failure. Right here would be my first moving average target and target area, okay? Not a target of 109.15, a target area. So we might put something up there like this. Target area. From this target area here, we are looking at possibility of 11.5%. Now, if you're trading the stock, you're looking at 11.5%. If you're trading the option, you're going to be tapping 30% plus on this. And that right there is where I want to stop for a second, and I want to show you this. Okay. Now, this is, if anyone, I have 3 accounts I'm trading. One account is well on its way to double. I'm $20,000 short, $22,000 short of doubling from March. So I'm pretty sure I can get $22,000 between now and next March. I'm pretty confident of that. I have 2 other accounts that I'm trading, and they're smaller accounts, and they're just getting them going, just working on them. So they're different levels. So the one I just spoke of that's up, that started at $100,000. I've got another one that's right at 25, and another one that's at $5,500 that I'm playing with. 2 different accounts. I kind of do 2 different things with them, and okay, that's enough about those. So what I want to do is, I like the idea of doubling my money. Now, is there anyone in here that likes that idea? I mean, do you just like the idea? Whether it's a pipe dream or whether you do 5 times that much, do you like just the idea of doubling your money? For those that make 5 times that much, it's not that hard. You've got it figured out. You have wrestled that cow. You have put it to the ground. You've tied it up. You've got it figured out. But for those of you that may not have that figured out, it's not as hard as you think. It's really not. Let me show you here. Now, most of you maybe have seen this. Most of you have maybe have seen this here. So if you have a starting balance, let me back up. My 12 months, by the way, it gets, for calculating, we go down to days. Now, there's 365 days in a year, but I'm not going to work 365 days in a year. There's going to be some weekends. There's going to be some natural market holidays. There's going to be holidays that I want to take just because I want to take them. That's a trader's life. There's going to be days that I just don't feel good. I'm sick. There's just those days. And I have calculated in my own mind, I've done the math on it, and it works out to be about, there it is, 210 days that I can trade. I have 210 active days that I can work. Now, I take that, and it's built into the calculator. If you have a $5,000 account, just type in $5,000 and hit enter, and that doubles your account over here to $10,000 in 210 days. This right here, this number, this is, excuse me, that's all you have to net per day. So rather than looking at this number and trying to make it that number, because that is impressive. That's hard. Holy cow. How in the world am I going to make money? How am I going to double from 5,000 to 10,000? I've been struggling. I've been doing this. I've been doing that. I've been winning, I've been losing, yada, yada, yada. How am I going to do that? Break it down to something that's more simple. $23.80 a day. Dang it. $23.80 a day is all you have to net. That means that if you have 10 trades on and you have 9 losers, if you have 1 winner that beats all those 9 losers by $23.80, you have, where's my, doggone it, you have made a goal. That's what I call this. You have made a goal. Okay. So as an example, this is a real-time example. I closed some Tesla out yesterday. TSLL, not Tesla. This is the ETF for Tesla. Let's see, how did I write this? Closed some out yesterday I closed half for 38%, and then half of my Amazon for 29%. More than made the goals for the higher priced account and the lower priced accounts. Cleared it up, did it great. I had this in 2 of the accounts. I did the same thing today. I closed the other half for that 26% and 27% I wrote Tesla here. That should have been TSLL. My bad. And then Amazon for 27%. Goal achieved. That's all I need to do. I don't need to worry about tomorrow. I don't need to worry about anything else. Just simply work with what you have. You have approximately 210 days, and you're going to be almost the same, okay? Pretty near. Everyone is going to have some amount of money in their account, and I'll show you how this might work here. I'll change that number. But the whole idea is to achieve those goals. And let's just say, let's see, that's 5,000. So let's just add a 1, make that 15,000. Maybe that's how much money you have in your account. Just hit enter at this point, and there's your double. And here's how much you have to make a day, net, okay? Net. Now, for somebody that has $5,000 or $15,000, or for somebody that has $5,000, you're probably thinking, man, that's a lot. But if you have $15,000, it's not a lot. And everything stays the same. So if you have $5,000 in here, if you have $5,000, let me hit enter, 23, we'll call it $24, okay, to double it. You're still going to do the same thing. You're going to, let's see, you're going to buy shares or options, something in there, and you're going to sell them. And we're going to assume you're going to sell them for profit. Okay, we'll assume that. All you need to do is make $23.80. So you're gonna lose some. Everybody loses trades, by the way. Please don't ever think that anybody never has a losing trade. Not true. So all you got to do is do this. Well, what do you do if you change this to 15,000 and this is 30,000 and this is, what was it? We'll call it $74, like this. It's called scaling. So for the $5,000 account, sometimes you might only be able to buy one contract or, I don't know, 10 shares, okay? Maybe that's all you can do. But all of a sudden, if you're trading $15,000, what you're doing is you're just scaling up. So this here, maybe you buy, can I turn that into 2? Maybe you buy 2 contracts. Maybe you buy 20 shares. All you do is scale. That's it. Nothing else changes. Not a single thing. So where I'm going with that is when you're entering a trade, which this is looking to me like a bearish trade setup, it must stay below the 50-period moving average. At the same time, I'm going to consider the trend indicator, which is red. So if price was to move up a little bit, and maybe it moved up right above the 50-period moving average, but below the trend indicator, I would take that in account, because for me, it's more of an area that I'm looking at. I'm also looking at the candle design and what the market is doing, okay? So let's assume we get short this. And let's just assume for a second we come down here. Let's see, if that's 11.5%, let's just cut that in half or eyeball it. So what is that going to be? 5.5, 6% right there. Well, if 5.5 or 6% turned out to be, say you have a $5,000 account, if that turned out to be, let's say $100, okay? Well, you could sell half that position, take your $50, you've made 2 goals, and you still have some left on the table right there, okay? And that's what we want to look at when trying to double that money, all right? And I do apologize. Once again, I get sidetracked. I'm so bad about that. I've got more blue ice failures to look at. Let's see. Is this with trading stock or options? Is what? Do you mean my trades B to 1? Those are with options. Or Kev. Sorry, it's Kev that asked that question. My bad. B to 1, you have 100 shares of TSLL. Yeah, you know, I didn't sell mine until the second half. I sold half yesterday and then the second half at the end of the day. The reason I sold them is because I have no edge and because it's honestly a crapshoot the next couple of days. There is just no edge in this market. And what was it here? I mean, look over here, Tesla 38%. So if I have 38% profit, okay, on this trade, and I don't protect that, the market is unhappy with some numbers, and then this moves down, that's my own stupid fault. I deserve what I get because my job is to make goals. Goals is what doubles the account. Okay? So if the market is unhappy, the likelihood of Tesla pulling back, I think, is high. And this is part of risk. Now, it seems like most traders, you know, they want to look at, well, there's the entry. Where should my stop be? Because that's my risk. No, that's not your risk. That's your risk. But there's also another risk. And that other risk is that money right there. And I did not want to risk that money, even if it went higher. Because no matter what, this particular chart pattern is setting up for a better buy anyway. I mean, this whole chart pattern is looking for a buy down here. So why not collect my money, no risk now, way ahead of the game, let it pull back. If it decides to start moving up and set up again, buy it back, no sweat. Easy peasy. All right, did I get all that? Let's see, Rob, do you ever close half and the other half goes the other way? 29% would make me very happy overall. Okay, that's a good question. Let's see. The first part, do you ever close half and the other half goes the other way? I'm not sure whether you mean goes the direction I want it or the direction against me. The answer is yes to both those, to that question, okay? Now, here is something important, Rob. A good question, by the way. Very, very good question. Look, the fact is you're going to have losses. Thinking you're not is insane. It's just not going to work out that way for you. Another thing is losses tend to be bigger dollars than wins. For those that struggle and don't make any money, okay? For those that have a hobby, you want it to be more than a hobby, but truly it's just a hobby. And this is where, be honest with yourselves. For those that you might be making money, but it's just trickling along really, 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 really slow. You're going to find that your losses are probably bigger than your gains. Okay, so that's one problem that needs to be curbed. But here, what was it, Rob? Here's what I want to do is say I buy 2 contracts, okay? 2 contracts. And we run up, and let's say I'm looking for, I'm going to round this to $25 for my math, okay? So this runs up, and maybe I have a $100 profit. And that's a very common thing. Well, I can close half this position. I'm going to have a mess here before I'm done. I can close half this position and put $50 to the good side. I've just made 2 goals. Hey, 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 you can't take that from me. I own it now. That's my money. You cannot strong arm for me for that. Mine. Now, I only have 1 contract left. As long as the chart's still working, I want it to go up a little bit more. Now, I'm not one for, some super monstrous gains. I'm not that kind of trader. And there's nothing wrong with that trader. If that's, if you can do that, you can do that. I'm not that way. But if I can come up and I can add more gains, so remember the original number that I profited was $100. I closed half of it out. But if I can take this and run it up to another $100, and actually with options, what happens most of the time is the number goes up exponentially. This number here, probably more likely 200 or 300 or even 400. Now I can close that out and we'll just say 300 over here. Okay. Now, why would I want to do that? This is the number right here that means the most to me. That was the most important trade. That was the best trade. Now, most people would say this would be the best trade. I disagree. You know what this trade is? This trade is for those losses right here that I know I'm going to have. And to think that I'm going to wake up every single morning and not have losses is that's just being drunk. That's just drinking and driving. That's texting and driving. That's just a wrong thought. It's not going to happen. So what I've done is to double the account, I just need to make, what was it, $25? Well, I've made 2 goals here. I've made extra money to cover my losses. Now, hopefully I don't have all that for losses. So some of that just might go into the double your account kitty. Okay? I hope that makes some sense. So anyway, once again, I get sidetracked. I do apologize for that. I can't help myself. All right. I hope that helped, Rob. How do we get this calculator? I'll send you a link. It's real easy. It's on the website. I'll get that for you. Unless maybe Ed has it below or something like that. But I'll certainly, well, here, I could actually do this. Here, I'm going to put it right here. I had it in front of me. I guess I could do it. Whoa, daddy-o. Oh, other stuff down there. So I just posted it down there. Now, let's see here. Kev, how do we have that answered? Okay, Malcolm, no, this track is on the side, is a branch. Okay. You have call options on both those. Be nice. Let's see. Okay, so your question was against me. Do you see on this TSLL the possibility that if there was bad news tomorrow, and there doesn't have to be bad news. I mean, there doesn't have to be bad news at all. For whatever reason, TSLL could gap down and go this way. Well, now I've screwed the pooch on this. I made money yesterday, right here, because I sold half, because that was just a smart thing to do in my opinion. Now, I didn't sell up here because I did want to keep this. I was wanting to keep it because I happen to think this gap up here is the target. That would have been what I'm looking for, or at least awfully close to it. But with the numbers coming in and then all of a sudden the market getting flaky around that 50 period moving average, that means the world to me. You know what? I had to protect my money because I didn't want this to happen. So at the end of the day, did I make everything I wanted on TSLL? No. Did I make my goal? And then some. And I did the same thing with Amazon. The exact same thing. Took some off yesterday, closed it out today, made money today, made more money yesterday. But I walked away with goals in the bag. Okay? Okay, let's I apologize for this. This is me. Just take a look at NVIDIA. Look at NVIDIA. So I look at NVIDIA here, and what I see in this chart is the possibility of a rounded top. I see that possibility. Now, if you know what a rounded top looks like, then you know that that is starting to look like it. Now, it may need to come up maybe a little bit more, try another breath or two, but it's starting to form a pretty good rounded top. Here, we've got this blue ice failure setting up below the 50 period moving average. On top of that, we have some nasty ass candles up here. I'm talking, that is pitiful. Now, anybody that's been in the trading room for the past couple weeks, or you've heard me talk about NVIDIA, I have been adamant about I do not like NVIDIA. I didn't like it for a long, and I didn't like it for a short through here. There was not enough information. Now, of course, the cat that shorted up here, you're the smartest cookie in the room. There's always going to be that person. Always. There's always going to be the person that shorts it up here. And if that's your strategy, okay. But that's not the blue ice failure strategy. Blue ice failure is we want it to prove we can get down there. And now we can start looking to the downside. The next most important thing to me there is look for your targets. The entry is not important. It's the targets that are probably, well, they're the most important to me. Right there, there's got to be something in there. There's just no way. Yeah, there is. So what I did is I went to a weekly chart. Yeah, we'll just go about halfway, I guess. That works out. I just went to a weekly chart to get a place where price has been before, because that's what makes up target, support, and resistance is where price has been before. So that's what we're looking at for targets. Now, if you stop and think about it, potentially, and it could go lower than this, but potentially, based on the trade I see, there's a possibility of about a 30% down draw here. Very possible. With that in mind, I don't have to be in a big hurry. So this looks like a short today. It does. Looks like a short tomorrow, providing we pretty much stay below the red dots. But with the news coming out, I don't have to be in a hurry. I don't have to short it tomorrow. Maybe we can let some news filter out a little bit. Maybe that becomes a short Thursday, Friday, or maybe this happens. It pulls back. It tries to find a little supporting area here. Buyers think there's some hot shots. They come in here and this starts to fail. That short just got better because that rounded top is now about completed. So you have time to work with the trade. One of the keys is to put it on a watch list and wait for it. Another one is Trex. I posted this one in the room today as a possible short. Let me darken up this 500 period moving average here. Okay, there we go. That's the 500 period moving average. Now, if you don't think moving averages work, find some, or put up on your charts some major moving averages, the 50 period moving average, the 200. Under that, I mean, most common are maybe a 20. That's kind of, I mean, that's extremely popular. It falls under the category of major. It does sort of. Try using that 500 period moving average along with your 50, your 200. I like the trend, what we call the dotted deuce here. I like that too. You'd be amazed how that works. But just go watch how many charts obey those moving averages. Just go, if you do that, spend a couple of days, don't trade. You have to keep your mind on this and just study charts and just watch how they obey moving averages or disobey, because we want disobey sometimes. Like obey this bounce We disobeyed it. And that's working out great. Now that we're below it, obey the bearishness of the 50 period moving average. You'd be amazed. And it's easy to trade that way. Yes, Mara, you're right. You've got a, also with this, you've got a bearish head and shoulders setting up. Yes, you do. Absolutely. So I'm looking at this here. First target down here to the, well, see, I better do it this way, hadn't I? This is always going to be where my eyes go first. And that's just a no-brainer visual, right? Now I'm going to come in here and I'm going to look at that and say, well, we get right in this area, right in here. That could cause a little bit of a bounce. But wait, hold the phone. Hold the phone for a second. What if we did get down there? Say you shorted this. We got down there and we started to bounce up. Just hang on, because you got nothing till you cross that line right here. You got zip. So we can rally up. Yeah, you may get stopped out. It's very possible, depending on you as a trader. We come up here and then boom. Now what have we done? Failed, 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 failed. And by the time we get up here, you're still going to be messing around with that 50 period moving average, if not below it. And now we've got some really good looking targets down here. Okay. Next one, Marvel. Take a look at Marvel. Before I go to Marvel, let's look at SMH. SMH looks horrible, ugly, pitiful. You're talking about a confirming rounded top, bump 1. We come up. These are both bump 2. And now you have bump 3. So bump, bump, bump. And there you are. There's your rounded top. There's your failure of the 50 period moving average. SMH looks horrible. Now, why did I look at that? Because of Marvel is semiconductor. While I'm here, let's stop over and take a look at the transports. What about the transports looks good? Well, maybe there is some good here. Maybe. We'll talk about that while we're here. But you can see how that's been in a absolute downtrend based on the trendicator. All red. Got a little green one right here, but overall, all red. Now, here's your blue ice failure, and here's where you come up for your entry. Now, there's a lot of people going to catch that here. There is. But what I'm looking for is this type of chart pattern where we're down and we rally up and down. I'm going to make this bigger. Where we're down, we rally up and we're down. And I want to be closer to that 50 period moving average. Right in through here. Same chart. See there? Same thing. You have to just have patience and wait for that. Stalk it. I've been trading 35 years. It took me 34 years to figure out patience. No, I'm kidding. It takes a minute. I'm not going to lie to anybody. Anybody who thinks, and I would welcome anybody to take a trial with Hit Run Candlesticks. But to think in 30 days that you're going to master all this, be straight up honest with you. It's not going to work out for you. Straight up honest. So let's talk about the transports now. There's the 500 period moving average. There's the dotted deuce. Could we bounce off that? We could. If we take a look at this, take a look how the 500 period moving average was obeyed back here. I'm going to call this an obey of the 500. It got a little out of hand. But look, if you've got kids or grandkids, you know they get out of hand too. You bring them back into the right play, right? Look how we absolutely obeyed the 200 period moving average. Absolutely obeyed it. So I see us moving down here. There's nothing bullish about this chart when it comes to price action or the chart pattern, but I'm not about to short it. Not while we're here. Now, I'm going to use the moving average to help me out. We're too close. So if we go below it and then come back up, I can see that. But then in this particular case, we have to deal with the 200. So probably not a trade there, which I don't even remember the last time I actually traded IYT. But it's a good chart to watch to help you with market decision, what the market is doing. Okay. Let's see alpha. Let's see Walter Carmen. Is the dotted deuce the 100? No, and Walter, no. Okay. Walter first. All right. The 17 EMA is the trendicator. That's the red and green dots. Okay. Carmen. The dotted deuce, take a picture of it or write this down. Don't try to copy it if you have TC2000. Just write it down. It's the 200 period moving average. The average type is front weighted opposed to simple or exponential. And it's the average of, whoops, that is wrong. That should be low. It's the average of the low. Okay? I don't know how that got changed. Maybe I clicked on it earlier. So 200 front weighted low. Alrighty. Now you can pretty much set this up on any chart software you have. If you can't, call them and ask them. Finding the low is a piece of cake. If they don't have it, honestly, you need to change software. But I've never run across any software that you couldn't create that one. Okay. So alpha, Rick, say you're up $500 on a position. Do you start to manage the trade by raising your stop, or do you take profits and close a position? Great answer. Great question. Sorry. It all depends what you're after. If you're after a home run, which I would sure like to know what the definition of a home run is, outside of hitting the ball, running around first, second, third base, and getting to home. But in trading, sometimes we throw that word around, that was a home run. While it may be a home run for me, it might mean nothing to you. So, like being up $500, for some people, that's front pocket folding change. For other people, that's a doggone home run. So, it's all about you and the trader. What is it you're after? Now, some traders want those big, massive gainers. Okay? Some traders just simply want to double their money and make $24 net a day. Now, I'm not saying you have to day trade. I'm not promoting day trading here. You might be in a position for 5 days and you finally close it out. You may close it out for $24. You may close it out for $240. You may close it out for $2,400. It's just an overall average per day, okay? Just an overall average. I didn't mean to try to promote day trading where you have to close something every single day. So, it's all about you as a trader. Me personally, I get to $500 and I start getting squeamish. My knees get weak. And it's just the trader that I am. I'm very comfortable taking it very slow to double my money. I'm very comfortable with just easing into it. I don't have to make those, massive winners. And I'm not saying $500 is a massive winner. For one account, yeah, it would be a huge winner. For the bigger account, it would be an okay winner. I mean, don't get me wrong, okay was a bad word. It'd be a fantastic winner, but it wouldn't be a grand slam, wouldn't be a home run in the bigger account. Smaller account, that would be a home run. So it all depends on you as a trader. I thought I was going to say something I wasn't. Bottom line is I'm the kind of guy that can just take my time and let it move up, take my money, and then maybe the other half. And I'm not usually a triple type person. I'm a half most time person. If the market was insanely bullish like a few years ago, that might be different. But in today's market, I'm pretty much just a double person. I'm also just a take my profits and be a happy person if I can make my goal. Honestly, most people, if they could double their account this year from 5,000 to 10,000, and then next year double their account from 10,000 to 20,000. Whoops. Just connected a couple dots, didn't I? And then double your account from 20,000 to 40,000. I can almost see the smoke in the brains thinking about that. Holy crap. That might work. Yeah, it does. Okay. So I hope that was helpful for you, Alpha. In the end, it's not about, I can't tell you what's right or wrong. I can tell you what I do. And I focus on this an awful lot on that right there. So that's just my way of trading. All right. Let's see. Okay. Thanks, Ed. Yeah, if anyone's interested in trial, use HRC 50 for 50% off. Take a look at FMX. Look at that. Does that look like a short to anybody? For those of you that dig the 3/8 trap entry, which I happen to, that is right there, man. Right there. Simple entry is right now. I'm just going to put one line right there. Another entry for those that want to trade on weakness, then below there. A simple stop above those highs. Now, every trader is different. You can massage those a little bit. Some trader might use the trend indicator, the 50. No one, we're not all the same. But just in broad strokes, there's your trade right there. That's a good looking trade. Let's take a look at FedEx. Look at FedEx. Holy moly. Look at that thing. What if we got down here to the 200 and the 500 period moving average? Now, I doubt it's going to come down in one big swoop. I doubt that. We're talking 15%. Now, to some traders, that's chump change. Put that in terms of options. Holy moly. You're buying dinner, dude or dudettes. So, that would be a buy below that candle. It's a buy. It would have been a buy today. Your stop in broad strokes. If we came back up over that candle, I would probably make an argument if it turned green again up here. But every trader is a little different, just a tiny, tiny bit different. FedEx looks like a humdinger of a short. A humdinger. That's going to be the new trading word tomorrow, humdinger. So, FedEx, not likely. I don't believe it's just going to go down there. I believe it'll come down. I believe it'll go up and come down and do what charts do. As it does that, we'll leave the 50 period moving average, and then we'll start using the trend indicator to help us with that. And, well, that's a different night, I guess. Let's see, SPXL. I want to get through these, and I've got just 5-6 more, okay? And these are all very actionable, I believe, very actionable to the short side. I purposely focused on shorts tonight because it's no secret. I would personally prefer the market to be long, but I knew if I get started in the long direction, I'll never get out of it, so I have to stay short here. Take a look at SPXL. Now, that's the triple ETF. If you don't know what that is, Google it, educate yourself, and learn. Don't trade it tomorrow till you know what you're doing. But this is the triple to the S&P 500. Look at that blue ice failure setting up. Very nice. We're failing the 500 period moving average. Ouch. That might smart. That might smart. Down to the 200 period moving average, we're going to put a line right there. The reason I'm going to do that is look at that support. That's pretty solid support. Now, is it likely to maybe try to pick up some steam? Now, I'm assuming we're going to fall, okay? Again, the market may be very happy tomorrow and bust out and rock and roll. It could do that. The way the charts are set up, and that's the only thing I'm going off of, is the charts because I don't count on the news. So I'm just seeing that this is failing the 50 period moving average. It's a blue ice failure. There's one bump, there's two bumps, there's three bumps, there's your rounded top right there. We're failing. If you get through 86, which could see a bounce, now we're going to come down to that next area. You can put your line at the very tippy tip if you want of that one, the tippy tip if you want of that one. Bottom line, you're going to be looking at an area. Good luck with that exact 0.48 price target. After that, honestly, I see, 77 down here. From where we closed today, that's 13%, 13.25%. Again, with options, that is a ball smasher in baseball. That hits it out of the park for most people. Can we suggest stocks that may be shorted? Sure, fire away. I've only got a couple more. I'll come back and get it. Look at GPRO, which is shorting the S&P 500. Excuse me. Now, the reason I like this or that SPXL is because sometimes you might not want to put all that money into the S&P 500 or the SPY. It's more money. Look at this. It's only $46. So less investment, and you'll get just the same bang for your buck. You'll get just the same. And here we are failing that 500 period moving average, failing the 50 period moving average, set up with a bear flag or H pattern. Okay, for the bullish side, you do still have this. So let me throw a little wrench in there, just a little one. That might be a little bit of a wrench, hammer, something in there. A toothbreaker if you get too carried away with the shorts. And then here we are to the downside for a nice 11-12%. SHW, another blue ice failure setting up. We come down at a clear sell signal here. We come down, we bump the 50 a couple of times. Looks to me like we're not doing too good with it. Take a look at KBH. I like that one. I post this one in the room today near the close. Look at that bearish head and shoulders setting up. Shoulder, head, shoulder, down, fail the 50, try to get back up, try to breathe. I need life. I need life. This is somebody drowning in a lake, or better yet, the ocean, unless there's sharks in the lake. Here's somebody that fell overboard. They're drowning in the ocean. You know, everybody has one breath left. And they come to the top. They're exhausted. They're tired. They're tired. And all of a sudden, here comes the fins. Boom, 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 boom. Or maybe it's, what now, Jaws. Dun-dun, dun-dun, dun-dun. Anyway, I like that for sure. Qs here. Take a look at TQQQ. Again, why would I want to short this and not the Qs? Well, maybe the Qs are too much money for you. You know, for some traders, it's not. But for $40, I think that's a reasonable, you know, we can get into something like that. Options, it would be, I guess, in some cases cheaper. I don't know what the options are on it. But here we are failing the 50. We get through that 500 period moving average. I think that's important. And that gives us, wow, that's 16% to the dotted deuce, and 200 is 25%. Now, those are my go-to. Okay, those are my automatic go-tos. Price is probably going to bounce around this area if it got there. I'm maybe using that word bounce a little too much. You know, maybe it does a little over here, and then down. Maybe it does a bigger and then down. As you can see, I'm somewhat short tonight, which is pretty rare for me, which means the market's likely to be up. SMCI, take a look at that. Does that look bullish or bearish? Now that we know more about the 50-period moving average, now that we might have a little more faith in it, that look bullish or bearish. Do it like this. Now this program I'm using, by the way, this is called Camtasia. It's really a cool program. Now there's other programs out there. We use it for recording. It just has this cool tool that we can do right here. Okay. If you can do something like this, is worth it. If you can do that, you would be amazed that how powerful a picture is. Absolutely amazed how powerful a picture is. I mean, look at that right there. Below that is bearish. Above that, we're going to get bullish. Now, I'm not saying that just because we pop above it, you get bullish. That's a different conversation. The completely different conversation. We have to talk about entries, things like that. Okay. Last one that I have, and then we're going to look at a few of yours. Look at BLDR. Ouch. Can we draw a line to show the trend? Yeah, but look, it's doing this, right? Yeah, but it's below the 50-period moving average. So, geez, what am I going to do? Well, why not wait for more information? That would be the first little target, no doubt. And then we're going to throw some major moving averages in there. And we're going to follow price anyway. So there you go. There you go. Okay. Let's see here. C. How you doing? Let's look at some IFF. IFF. Yeah. That's, I mean, it looks short to me. Let me move this over. That certainly looks short. It's down. Sometimes I have to wonder, whoops, there we go. Sometimes I have to wonder, you get down this low, are you going to get those bottom pickers stepping in there? And I'm just looking at the weekly chart, and you see where we're running into this. So I have to ask, you can choose to answer or not, why would you want to short this? And why would you not want to short this? And they're daily. So why would you want to not short this, but you would go after IFF? Unless C, you're already in it, in which case you need to declare that. The trend is down. There's no question about it. No question in my mind about it. But I'm not sure. I would question getting past here, which is 8%, but there certainly is a little backfill trade here. I would say that. So 3-4% maybe. Let's see, you had another one up there. EL. I think a few people, Estee Lauder, yeah, a few people are short this. I look at Estee Lauder and man, horrible, right? So let's go look at the weekly. And here we are flirting with that 500-period moving average. We're just flirting with it. I know we're below it, but we're in flirt territory. You've got a pair of tails down here. So I think we're going to have to get past those tails. Let's move over to the left. Do you see the possible support running in over here? Possible? Now, it's still in a downtrend. There's no buy here at all. And could we drop down and maybe grab that low right there? Sure. Why not? And from where we are now, what, 8%? So, yeah, I think that's still short. You're going to have to get through 148, this low, right in here. Okay. Let's see, Rick, what do I think of Massey? That's going to fall in that same category. It's absolutely bearish here, but I haven't looked at the left side, so we probably ought to look at the left side a little bit. And to do that, let's go to a weekly chart so we can see more of what's going on over here. And let's put a line there. And you see that shelf? Or could we start to pick up some buyers? We could. Could we get through this? Absolutely. There's nothing about this chart that is remotely bullish. Not even remotely. I just want to point out that when you get a chart that has just been bleeding to death, you want to be careful that you don't get those bottom buyers in there, okay? Now, if we get through this line here, man, well, we better go right here. Now, this is pretty broad strokes. I'm just looking at the weekly chart, okay? In the daily chart, there's going to be a lot of humps and bumps along the way. But I see that as short. I wouldn't be chasing it, so I'm almost guessing you're already in it. Would you wait for a rally? Okay, maybe you're not in it. Of course I would wait for a rally. Trading 101. 1, 2, 3, 4, 5, 6, 7 days down. You count 5, I count 7. We'll split it down the middle and say 6. That's too oversold to be shorting, I think, personally. Hey, thanks, Sam. Appreciate it. Kevin, what service do you offer for trading options, and how do you receive the recommendations? Number one, we don't give recommendations. Nope, we don't do that. That's a bad word in our world. I do share with you every trade I make, win, lose, or draw, in real time. But I do not recommend. I just share what I do. You get these with the app. You get these with the app, which means you can be golfing if you want to, sailing, as long as you get service, I guess, for your phone. You can get the alerts, okay? Whoops, I'm sorry, Rick, Ed answered that. My bad, I didn't notice that. What's the difference between this room and BYOB? JT, BYOB is fast day trading and scalping. I'm a bit slower. I'm a swing trader off the daily chart. All right, so let's take a long as an example. I might look at this long. So if I was to buy this, which it's going to have to break out here. When you get that breakout, I'm looking for, could be 2 days, could be 5 days, could be 10 days. A lot depends on the market. Let's see. Where are we here? Thank you. Let's see, Kevin, Ed. But the reason I ask, how about you receive recommendations, is because the market here in New Zealand, we don't use that word recommendations. Kevin, you gotta stop using that word. I won't be able to attend the trading room. Kevin, you don't have to be in the trading room. You just have to have the app. You do have to log in the trading room once every 7 days. And then that keeps the app activated. After that, you don't ever have to be in the trading room. Tim says, bought some McDonald's today. I haven't eaten McDonald's in 2 weeks, and I feel so much better. You bought some puts today. I can see that. That looks good. That looks good. Remember, the 50-period moving average is just a major moving average. That's all it is. And Dave Elliott, First Wave was his trading handle, created this failure of the 50-period moving average. You could actually take the exact same thing and move it to any moving average you want to. It's just a moving average. The reason he chose the 50 is it's probably one of the most important moving averages there is in the stock market. And I mean, I've never seen him do this, but I think in his mind, if he had the colors on his chart to do that, he would probably do something like that too. So above the 50, people generally look at some bullishness, not bearishness. Now, I'm not suggesting just because it's above the 50, we're going to take off. Above the 50 generally looks for bullishness. Below the 50 generally looks for bearishness. To a point, okay? To a point. And then if the chart pattern was to change, then we might get bearish or bullish up to the 50-period moving average. Sidetracked, this chart still looks short to me. That looks like a great short, if you ask me. I question the entry, perhaps, but, you know, that's just the difference between traders is all that is. Yeah, that's just a difference between traders. However, your line here, I think you have a really nice trade. I do. I'm more of the kind of guy that's going to wait for a bearish candle and not a bullish candle. So if you did this all the time, and, you know, if this was your typical trade like that, I'm going to be watching for the bearish candle. And if our target was the exact same target, you would always make more money than me. Always. Because I'm looking for that candle where you'd be willing to buy that candle. Nice chart, by the way. Excellent chart. MDB to the short side. Yeah, let me get rid of all that. There you go. I think I looked at that today. Absolutely short. Yeah, absolutely short. I mean, you look at all that. You look where I just on the 50-period moving average, okay? And just take a look at all the touches. Finally got through, and look at the support. And we went up, bounced around. Look at the touches for support. Look at the touch for failure. Moving averages mean something. They are important. Anyway, nice. Very nice. Let's see. Okay, now I need a line below. Somebody could draw me a line. Now I just looked at my clock. I didn't realize what time it was. So I love this. Mel jumps out. Personally would wait for McDonald's to get closer to the 50-period moving average to buy puts. I don't disagree with you. I don't disagree with this trade either. That's the differences of traders. That's a choice a trader makes. Absolutely a choice a trader makes. Like I said earlier, I would not buy the put here because of that candle. But I see the logic being placed on this trade. So you waiting for the 50 up here to get tagged, you may not get a chance for that trade. On the other hand, if you get a chance, I forget who did that short here, probably going to lose $1 or $2. So it's a choice of traders is what that is. Sandy, I have put the 20 EMA and the 50 up. Cool. I like that. I'm looking at your chart. Green line below the red line. That's a good sign that the bears are attacking. Let's see, Carol. Malcolm, I've been trading it. Kevin. Is the trading room open from market open for how long? Yes, Kevin. Market open to market close. Actually, I start about 40 minutes before the market opens. And when the market closes, I'm pretty much ready to go home. All right. I want to thank everybody. I hope this was helpful. If you would like this link, I don't know how to get to it. Huh. Oh, there it is. If you would like that link right there to that calculator, please take that right there. Save it on your desktop somewhere. Watch your email. I'll probably throw it in an email as well. Okay. I don't believe this is actually on the. I could be wrong. Ed, check me if I'm wrong. I don't believe this is particularly on the website. I will email this to everybody, so check your email. I promise you Scout's honor in the morning. Tonight, I'm going to go find a ham sandwich and go sit down. But I promise you I will send this to you in the morning. Okay? All right. Again, thank you, everybody. Please enjoy what's left of your evening. I hope you have a great day tomorrow. And remember, we've got some news coming out that could rock this world. And maybe not in a good way. Okay? We'll see everybody. You guys have a great night. Thank you so much.